Let's get into our results service now. We're guilty, I think, of not doing enough on the small and medium-sized businesses on Power Lunch, but let's start to set the record straight there anyway. By looking at the half-year numbers for a company called Onelogix, the logistics company, these are the numbers for the 6 months to the end of November. And in the Power Lunch Johannesburg studio is the CEO of Onelogix, and that's Lourens. Ian, a nice set of numbers. Revenue up 15%, headline earnings per share up 13%, operating profit 7% better. Margins down. I think that's because of the fuel price, but you can correct me if I'm wrong there. But what I like about your business is it says here, our people are success. And you've got a very entrepreneurial approach to what is a big business.
That's quite right. We're actually pretty much all entrepreneurs. All the 9 businesses in the group, in fact, are run by entrepreneurs. Most of them, the original entrepreneurs. And in fact, our model is to identify entrepreneurially orientated businesses and provide them the platform on which they can step up and then increase their performance and benefit from that performance. So yeah, it's very much part of our strategic thrust.
When you look at the detail there, I mean, we've got the group operates a decentralized and entrepreneurial management model. Take us through that model and how you've had to adapt in order to survive in challenging times.
Well, you know, the way we think about entrepreneurs is that they see things that other people don't see. And probably more importantly is they can turn that into action. They can actually make it happen. Many of the businesses in the original Onelogix were in fact by entrepreneurs. And so we've identified that there is a big opportunity there. So we typically would look for businesses that have got a lot of potential, where the entrepreneur's probably reached a certain scale that he can't get beyond without much difficulty. So for example, they would have to put their own house, for example, online to increase the size of their fleet and that sort of thing. But they're at the stage where they know that they can grow, but they need someone to help them with a step up. And that's where we step in, basically. And we purposely want them to come along for the ride. We don't like to buy 100% typically. We look to buy anything from about 51% upwards, and we find that model works.
Because of your entrepreneurial approach to your business, Ian, does that mean that you were cushioned somewhat from the strike action that afflicted the rest of the transport sector in South Africa?
Sadly, that wasn't the case.
Speaking about?
No, we were affected. It took pretty much a substantial slice, maybe 3 weeks of trading out of our results. So we're quite happy that notwithstanding that, we were still able to deliver the results that we did.
Taking a look at things, I mean, no matter how entrepreneurial you are, you can't run away from the kind of challenges that businesses generally in South Africa are facing right now. You've got rising input costs, intense competition, and as you've mentioned, you haven't been able to run away from the labor relations situation as well. What you have announced is a lessening of a dependence on your auto logistics operations going forward. So talk us through that strategy and how you see it working to mitigate against some of the risk.
Well, in fact, this is a systematic approach that we've had for a number of years. We're looking to lessen our dependence on the auto logistics side. Our auto logistics businesses, in fact, are so strong that they reassert themselves all the time, which is a kind of a happy dilemma to have. But in fact, since way back 2007, 2008, we've actually looked to do that. And we do it by starting our own businesses, which we've done, and also by acquiring businesses in the areas outside of auto logistics, obviously. And by doing that, we'll spread our risk substantially. We're quite happy, by the way, with auto logistics, but we look to spread ourselves beyond that, and that, in fact, has happened with our latest 2 acquisitions, United Bulk and a minority stake in Drive Report, both of which have gone down particularly well, by the way. And just as a matter of interest, because we are reasonably entrepreneurially orientated, we can slot in new acquisitions quite seamlessly, and yet with these 2, it's proven to be the case once again. So yeah, we're very happy with what we've done, although the new acquisitions haven't been reflected in the 6 months of trading. The acquisitions, in fact, were affected post-November, so they'd only see themselves working into the numbers in the remaining 6 months for our year end, which is in May of 2013.
Ian, just having a look at a couple of other of your divisions and revenue generators, I must say that PostNet is one of your divisions, and I have to say that people bemoan the fact in South Africa service levels are really, really poor, but every time I go into a PostNet, I'm always served punctually, I'm always served cordially, and I think it's a sort of bastion of service excellence in South Africa. Tell us about PostNet and also the other divisions that you've got, apart from the auto logistics that you've already spoken about.
Well, you know, PostNet is a franchise, And in a sense, it kind of adds to our entrepreneurial model, because don't forget, every store then is owned by an individual. So it's their store, they've got to make it work, they bear the consequences if it fails, and they reap a large portion of the upside should it work. So the model is quite simple, and you can see how it does work. If you actually have a very strong vested interest in the business, it works. And that's exactly what does happen in a Postnet store. To answer your other question about the businesses in the group outside of the auto logistics, the two that performed particularly well were RFB Logistics and Onelogix Projects. By the way, two businesses which we're going to amalgamate into one, and it'll be known as Onelogix Projects going forward. But what they do is they operate in abnormal loads, project logistics, and a large degree of general freight as well. They're based in Durban, very, very good entrepreneurially orientated management. Simply corroborating our model, by the way, because they've shown substantial growth, both of which only came into the group in around about 2010, one of which we started ourselves, one of which we acquired, and right now they account for over 20% of our profit, and it's just only happened in the last short period of time. So yet again, we think something that corroborates the success of our model.
You highlighted earlier that you're happy with the auto logistics divisions within your business. I mean, you highlight here that RFB Logistics and Onelogix Projects exceeded expectations. You've got the auto logistics business having performed well, the commercial vehicle delivery service seizing more market share, but vehicle delivery services just maintaining its foothold. Yet you're continuing to invest there despite what is a shrinking market share. So run us through the rationale and where those investments are being made.
Well, we're maintaining our market share. The beauty of VDS is it's a very strong business. It's a mature business, so it has the challenges of a mature business. I mean, cost control certainly being one of the central challenges that it faces. But what VDS has allowed us to do is to develop a whole host of skills that we can transpose to the rest of the group. So, for example, we're very good at managing a workshop. I mean, we service anything upwards of 15 vehicles a day. We are very good at storage facilities. We can store up to 16,000 motor vehicles at any one time. We understand the whole concept of driver management in a way that one can motivate the drivers. We've got a whole range of systems development processes in place. We have a whole host of programmers, for example, where we develop proprietary software ourselves, where we own the source code that we can develop, and all these things. Access into Africa. VDS has pioneered a spine into Africa, for example. We've developed seriously good management with it that we are able to transpose to the rest of the group. So VDS has really performed traditionally, I suppose, as kind of a cash cow. Not only does it generate cash, but it generates a whole host of other spin-offs which have benefited the other groups. So it's very central to our operation. It performs well. It's maintained its market share, and we look forward to doing exactly that as it goes forward.
Ian, finally, you say the outlook for the year remains positive. This is your outlook statement and accompanying your results. It says our businesses are well positioned to address challenges and also take advantage of growth opportunities in their markets. The acquisitions, you've already mentioned this, but I'll reiterate it, should start, you say, to contribute to results in the period ahead. You've got a nice sort of mix between acquisitive and organic growth. I can think of one particular company that must look at a company like Onelogix and say, this is exactly what I want. I mean, you could be an acquisition yourself.
Well, it may well be the case. We're very happy with the trajectory we're going on. Our plans are quite well established. We're fully committed to what we're doing, so we don't really worry about those kind of issues. We can see massive growth trajectory ahead of us. We're well invested as management, by the way. We own anything up to 60% of the equity, and none of us are selling.